Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening and what we can expect, of course, as usual, moving forward. So with all that being said and done, if you enjoyed the video, don't forget to hit that like button, as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below where I share Options Flow, which is a paid service for Cheddar Flow, which link down below if you want to try it for yourself, 25% off. But, pretty much all my thoughts and posts, whatever and whatnot, whatnot in that section. Link is down below for $3 a month. But let's just jump right into it. Tesla, of course, did report earnings, so we'll talk about that. Now, this is just the start of it. Obviously, in about an hour from recording this, at 5:30 Eastern, we have the conference. I keep calling it a conference call. We have the earnings call at 5:30 Eastern, where Elon will be talking. And well, who knows how that's going to go? Because it's either going to be really, really good, or it'll make this sell-off even worse. Really, who knows what's going to happen with that? But there's one thing that's important to understand. So first and foremost, let's talk about the actual performance on the day. Tesla, once again, no surprise to anyone, down 0.63% on the day, closing out shy of $208 per share, which compared to the market is, of course, yet another underperformance. And aftermarket, we're down about another 2.5%. Now, it was a lot worse. We were actually down at the very bottom, about 5 to 6% on the initial sell-off of earnings, which of course came in pretty much missed across the board. Some positives there, like gross margin was not too bad at all. The free cash flow was great. The energy business is growing phenomenally, but otherwise the EPS and all those things are not worth maybe some people wanted to see them. So we'll see, and we don't really know. I guess we'll find out maybe hopefully soon in the earnings call. The main question of, have margins bottomed? Have the price cuts finished, right? Are we done cutting prices? Because the Fed has indicated that they're probably not raising rates anymore. So if they're not raising rates anymore, hopefully the price cuts are done. And if price cuts are done, that means the margins rather probably are bottomed or have bottomed this quarter. And we can finally move forward from that and things can finally recover. So that's going to be kind of what we're going to be looking for in the earnings call. But one thing, and the reason I'm bringing up this chart, which shows aftermarket performance as well, is going to be for the simple reason. Now, as I was putting up all this flow, I talked about, how I personally think the most scary, in my member section, the most scary move I can see happening would be a large gap down / sell-off post-market, which is what we're happening right now, to about 195 into a large recovery tomorrow. The reason I say that is because, well, this massive sell-off, which so far did play out pretty much exactly what I said. I said to about 195. We went down to what? 195.4. The reason I said that is because that is essentially a double bottom. It is a beautiful double bottom sitting exactly where we sold off way back over here, right? As you can see. Pretty much not too much longer after these earnings, the previous quarter's earnings are reported, the third quarter earnings, where we obviously sold off, continued selling off, bottomed pretty much just shy of 200, maybe got some stop losses and whatnot, and then we rocketed back up. And that's exactly, so far at least, as to what is happening at the very moment. So we'll see how that plays out. But so far, it's a pretty interesting situation to bounce. And so far, we're also holding above $200 per share. Honestly, with how the earnings report came out and the numbers that are seen, only being down, at least for now, we'll see how the call goes, 2.5%. Honestly, it's not bad. It could have been a lot worse, at least in my opinion. But again, we'll see how the call goes. I'm sure Elon can help bring this down to about negative 10% pretty easily if you wanted to. You never know with that guy. But again, the main reason I'm bringing this up, and I want to keep this video pretty short because I'm listening to about stuff related to the earnings report, is pretty much the fact that we so far double bottomed at this very interesting point. And if there is a place to double bottom and to at least get some rally, I'm not saying this is the bottom, right? We'll talk about what can potentially make this the bottom, but to at least have a bottom, a temporary bottom, at least some form of a relief rally from a specific level. This is it, man. This right here feels like a pretty good level to do it. Obviously, we'll see how it goes, but this is definitely the second level. The first level was absolutely pretty much this level right here that we were pretty much dancing out right over here for several days in a row, which was right where this candle kind of gapped up and came back to fill the gap. And this kind of general 206-ish level was a level for sure. The next level is pretty much right down to here, which is, you can argue, a fair value gap, which is again right around that 194 195 level, where we pretty much bottomed on these two candles and then had a nice beautiful rally from there, which is exactly where we went to after hours. So that's kind of the main thing I'm looking at, right? And that's the main thing I'm seeing. The interesting thing though is the fact that the 4-hour was looking pretty decent, right? We broke out of this the green line trend line going down. There's still the yellow line to work with against to get back above. So obviously we'll see how that plays out. Currently, if we actually open up somewhere around the price that we are at right now, which is what, around 202, we'll say. If we open up around 202, we're pretty much still hugging the the green line that we technically have potentially, seemingly broke out of, and potentially can bounce from there. And as long as we break out of the yellow line, it's not looking too bad. The RSI in the 4 hour was, creating a nice bullish divergence. We'll see how this RSI looks like. I mean, we can get a glimpse of it over here in the 4 hour. Actually, if I go like this, you can see the RSI, even though we're obviously making lower lows, the RSI is looking pretty healthy, well above these levels back here when we were well above this current level. So, we're seeing some bullish divergences on the RSI, which isn't all that bad. I'm not sure if I have the MACD here. Maybe I can quickly put it in to see how the MACD looks. I don't know why it's here. We got this one right here. Let me go ahead and open that up. Right, this also shows aftermarket MACD, which, like I said, we did flip a little bit bullish, and then we kind of rallied up, and now we're potentially, retesting that bullish retest so far, and we'll see how that plays out as well. Again, when you have after hours on like this, it does kind of make these technical indicators a little bit, wonky, right? Because after hour price action usually is kind of random and kind of irrelevant for the most part, unless you have an earnings reaction, of course, like this. But we'll see how it opens up tomorrow and see if this MACD is still looking like a flip to the bullish side, which again, so far, at least intraday today, it did. So we'll see how that opens up tomorrow. But ultimately, that's the main thing I'm looking at right now, right? That's kind of the main idea, right? Now, the question, of course, is, okay, well, what makes this potentially a potential like a bottom? Like that's it, Tesla bottom, and that's it. It's not going lower versus potentially a dead cat bounce, right? Assuming this is the place where we at least get a rally from. The main thing I'll be looking at is pretty simple, right? At the very, very least, to even start considering this potential, like, 194-ish level, 195-ish level post-market to be the bottom, and that's it, Tesla bottom, then we can at least get, a beautiful rally, and I don't think we'll go lower. At the very least, I want to go back above minimum 230 to 235. Like at the bare minimum, I want to gap back above that, because this is a very strong resistance right around this general area on the 230 to 235-ish level. Remember, I talked about this level many times, so I don't want to break below it. Well, that will be a very important level to retake, and even better than that, of course, will be retaking about the 240. But if we go on the daily chart, actually better even so on the weekly chart, the more important level to break above is going to be, like I said, pretty much above this trend line right here. If we ever break back above, let's say roughly about, high 240s to the low 250s minimum, if not about 260 now, that will pretty much break us out of this overall massive wedge that we are in, which will be really important as well. Now, remember how I also talked about the other day how this current candle resembles very similar to what this candle did way back then on the spinning top, which also bottomed around the same level that we are currently at, right? Don't forget, they're pretty much at almost identical levels, and how this candle had a massive sell-off even further past it, which is currently what we're experiencing, especially now with the after hours sell-off with the earnings. The one thing I'm still hoping for that can still be a potential catalyst is or not catalyst, but potential play, is the fact that it recovers similar to what this candle did, massive recovery, and then of course it ends up turning actually into a green candle, if you will. So that's the main thing I'll be looking at for as well for tomorrow. I really want to see how the market digests this overnight and how it reacts to tomorrow, and that'll be really telling to me. That'll be really, really important, and especially with how we still have after hours coming up with or rather earnings call coming up with Elon. So who knows how that's going to go as well. But that's kind of the main thing I'm looking at. So far we are, interestingly enough, not selling off as hard as I thought, especially with these numbers that we saw. Honestly, it was a little bit of a, not the best looking earnings call for Tesla in the entire world. So that's number one. But the fact that we sold off almost exactly to the dot, exactly to where this sold off, and so far, fingers crossed, bouncing, at least shows signs of some promise. But again, we need to see how the market reacts to it tomorrow. We need to see how the earnings call goes. And I think tomorrow will give us a better idea as well. But all in all, there's still some hope for the bulls, but like I said many times, the bears still ultimately have control here, and the bulls have some serious work to do to really turn this around and to really turn this back into the bullish side. So we'll see if they can do that for the remainder of the week, and that'll be pretty telling. But all in all, thanks so much for watching. If you enjoyed, don't forget to hit that like button, and as usual, I'll see you for the next one. Peace.